Okay, welcome back to Financial Accounting at 6. In this video, we want to look at the preparation of statement of profit or loss and comprehensive income. We're going to look at the question paper of June 2022, and we're going to look at question 3 for that question paper. And the question reads the following relates to Mattress close cooperation, and you're given a trial balance of 20 February 2016. So this is the trial balance that you need to go through before you start answering the question. If you go to additional information, also we've got additional information ranging from additional information 3.1 down to information 3.8. So you need to go through each and every information that we have there so that you can be able to respond to adjustments that needs to be done. On the third part, it reads statement of comprehensive income for the year ended 20th February 2016, and it has got 30 marks. If you go to our other section, you'll see that we have got a statement of profit or loss and comprehensive income for the year ended 20th February 2016 for Mattress Close Corporation. In this statement of profit and loss, remember, we need to start with the figure for sales. So here we're just going to say sales. We have our sales, and then we go to the question to try to see what we have in terms of sales. Obviously, we get that figure in the trial balance. If you come here, you see that we have got a figure for sales that we have there. But obviously, you don't have to put this figure straight away. You need to check if you've got some returns, sales returns, or data allowances that uh, are going to reduce the figure for our sales. And also, we also have settlement discount granted. If they are there, you need also to check them so that we subtract them from the figure for sales, but we put the next figure for sales there in the statement of profit and loss. So if you go down, you'll see that there's nothing. And also, you need to go to additional information to see if you have anything that is affecting our sales. But if you go through our additional information, you are able to see that we don't have anything of such. We're just going to take our 554,000 and enter it as it is in our statement of profit and loss. So we come back to our statement of profit and loss, and so we are saying sales, and the figure that we have for sales is 554,000. So here we are saying 554,000. And then from there, we are supposed to go to less cost of sales. Then for less cost of sales, obviously, we're going to calculate it beneath that, whereby we are going to start with opening stock. So we go to the question, try to see what we have in terms of opening stock. Obviously, figure for opening stock, we find it in the trial balance. So if you come here, you see that here we're given that trading stock on 1 March 2015, we're given it as 30,000. So this is the figure that we are going to put there as our opening stock. And then beneath that, we are supposed to add our purchases. And we go to our trial balance again to check for the figure for purchases. So if you come here, you'll see that purchase figure. We're having it here at the bottom where we have 276,000. So before you enter it, also you check if there are purchase returns and also uh, settlement discount received. Also to check for them because they reduce the figure for purchases. We are supposed to subtract them from purchases and put it as a net figure. So if you check there, you'll see that you have nothing. And you go to additional information again, you see that there's nothing according to this person, but you need to go and check before you put this figure as it is. So here we're going to check it as it is, as 276,000. So we come here, we'll say 276,000. So this is what we have. And then we also need to go and check the issue of carriage inwards or carriage of purchases. If they are there, you need to include them here so that they increase the figures for purchases. We add them for purchases. And then, but according to this person, we do not have any. So from there, we are going to less our closing stock. And the closing stock, you always find it in the additional information. And you choose that trading stock is here, which is 52,000. So I will come here and we say 52,000. We are going to subtract it since we are saying, let's see. So we are now saying 30,000 plus 276,000 minus 52,000. Then the answer that you're going to get there, you're going to put it here, is 254,000. And again, we are saying less cost of sales. So this is the figure for cost of sales. So we are subtracting it. And if we subtract here 554,000 minus 254,000, we're going to get 300,000. And then the description of this figure is gross profit. So you have to take note that if our sales are less than our cost of sales, we're going to get a negative figure here. So you leave it in brackets. And if it's a negative, it will be a gross loss. We have to take note of that. So after that, we now add income. We are just saying plus our income. So we go to the question and try to check all the income that you are listed in the trial balance, and you will check additional information with any additional income that we have there. So you can go down checking any income that we are having there. When you come here, we've got commission received, and remember, all incomes will be on the credit side of the trial balance. Like commission received, we are seeing it's on credit side, 3,100. But before you enter that 3,100, you need to go to additional information to check if you've got anything to do with an adjustment that is affecting our commission received. But according to this question, we do not have any. So you just have to pick 3,100 as it is. We go to our answer section. We are saying commission received. Commission. And we are saying the amount that we have is 3,100. Then we go again to check any other income besides our commission received. We go down checking. We now have interest on loan to member. So you see, interest on loan to member is on the credit side. Like I said, all income is on the credit side. Interest on loan to member is on the credit side. It's also an income. So we have to check again the additional information if we've got anything that is explaining about interest on loan to member. If there's something, we need to check if this is the correct, because all the figures that will be given in the trial balance shows amounts that have been paid and received. So in this case, interest on loan to member, 5,000 is the amount that was received. But we need to know what amount was belonging to that period. So if the additional information is silent, it means this 5,000 will be the figure that will be belonging for that period. But in this case, if you go to additional information, you'll see that additional information is saying interest on loan from member and interest on loan to member are provided at 15% and 10% respectively. Take note that 4,000 was paid by Relato on 1 December 2015. So Relato is the member that we gave a loan. So it means on 1 December 2015, there was a payment that was made, and we want to count how many months before the payment was made. Remember, our year is ending on 28 February 2016. So it means it started on 1 March. So you're saying March to December, we want to see how many months are there. We are saying March, April, May, June, July, August, September, October, November, and then 1 December. That's when the payment was made. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9. We've got 9 months before the payment was made. So we are going to calculate the interest before the payment was made, and then we calculate the interest after the payment was made, because the amounts were now different after the payment was made. So what we're going to do is we're just going to check the loan to member to Lerato. It's that's how much. If you come here, you see that loan to Lerato is 38,000 here. So we are now going to calculate before the payment was made. We had reward 8,000, so the rate is 10%. So you're saying 10% is a decimal, is 0.10. and then we multiply by 38,000. When you do this, you get an annual figure, but we want only 9 months when we had 38,000, because after 1 December, 4,000 was paid, which means we had 38 minus 4,000 after 1 December. So for 9 months, we make a proportion of 9 months, which is 9/4. So if you calculate it correctly, you're going to get 2,850. That was for the first 9 months. Then the remaining 3 months to make 12 months, uh, 4,000 was already paid. So we had 38,000 minus 4,000, which was paid. And you see that we had 34,000 now after, for the remaining 3 months. So we are saying 0.10 times 34,000 times 9/4. And then obviously, let's try to see what we get there. We are saying 10%, which is 0.10 times 34,000. And then we multiply by, this is for the remaining 3 months. So here we have 3 months. And here we are saying 3. We're going to get you 850. So here we've got 850. So we add the two so that we can get the total interest for the period. So if we add 2,850 plus 850, we're going to get 3,700. So this is the interest for the period. This is the total interest to member that we received for the period that we were supposed to receive for the period. But if you go to the trial balance, you'd see that we received more than that. Loan interest on loan to member, we've got 5,000. So we received 5,000 instead of 2,700. So we received more. So what does it mean? This is a prepayment of an income, an accrual of an income, because we received more than what was supposed to be received. So we received more by how much? We can now calculate. We are saying 5,000 minus 3,700. So we received by 1,300. So we are saying we received by 1,300. So this was a prepayment or in advance uh of a of an income. And then remember, advance of an income is a current liability, and we are supposed to show and working there in the statement of profit and loss by saying 5,000 minus 1,300, so that we arrive at the correct figure for the period, which is 3,700. So if we come here on the other section, we are saying on the other section, we are saying for interest to member, interest of loan to member, interest on loan to member. Interest on loan. So the working is saying 5,000, and that's 1,300. And we're going to get 3,700 is the figure that we have there. So with that, we can now try to see if we have got any other adjustments which need to be done. So remember, uh, we also have the issue of provision for bad debts adjustments. Remember, provision for bad debts adjustments can be an income, can be an expense. If you have got an increase in provision for bad debts, it's going to be an expense. You put it under less expenses. But if you have got a decrease in provision for bad debts after comparison from the previous level of provision for bad debts, if it's a decrease, we don't see that it's an income, when you put it under R plus income section. So we need to first clarify before we go any further that provision for bad debts adjustment, where does it qualify to be? Does it qualify to be under plus income, or does it qualify to be under less expenses, so that we don't make mistakes? So this is what we want to do. So let's just try to calculate it and verify whether it qualifies under our income or our expenses. So if you come in the trial balance, you will see that our data control figure is 101,000 here. So we go to the additional information if any adjustments about this data control figure. Remember, this is the figure that we're going to use to calculate the provision for bad debts. So we are here 101,000. We are saying 101,000. 101,000 representing our data. But if you come to additional information, you'll see that we have we have bad debts of 1,000, which must be written off here, which is 1,000, which is supposed to reduce the figure for our data. So here we're going to say minus 1,000, and then we do that, we're going to get 100,000. So this is the net data figure after removing the one that were written off and the bad debt or the credit losses. So we now go to the point where we are given the rate of calculating provision for bad debts here. 3.4, the provision for bad debts must be adjusted to 4.5% of data. So we are just going to use the net figure. 4.5% as a decimal, going to be 0.045. And then I will multiply by 100,000. And then we can see now at the level of our data. So if we say 0.045 times 100,000, we're going to get 4,500. So 4,500 is the level of provision for bad debts for the current period. Then we look, we compare with the last period to see if there's an increase or decrease in the provision for bad debts for the last period to find it in the trial balance. So if you come here, you see that the provision for bad debts in the trial balance is 4,800. So we are seeing that there's a movement that is there of provision for bad debts from 4,800 to 4,500. This was last year, and this is this year. And this is a decrease. And we are saying if it's a decrease, it's an income. We put it under plus income. But if it's an increase, it's an expense, and we put it under less expenses. So in this case, it's a decrease of 4,800 minus 4,500, whereby you're getting 300. So this is going to be under our income. So we go to our answer section, and we are saying we have got provision for bad debts adjustment. Bad debts adjustment, provision for bad debts adjustment. So maybe we can just try to correct this one so that we put it line with the description 3,700. Then provision for bad debts adjustment, we got it as 300. So these are the incomes that we have. And then we can add now 300 plus 3,700 plus 3,100. And then we're going to get a total of 7,000, 7,100. So let's just try to see. So here we are saying 7,100. And we are adding 300,000 plus 7,100. We are going to get 307,100. And this one is the gross operating income. So here we are saying gross operating income. So this is what we have. So beneath that now, we now have less expenses, whereby we're going to list all the expenses that we have in the question there. So we can only get these expenses when we go to the trial balance. So we go in the trial balance and try to check them one by one. As we go down with our trial balance and go down, you see that the first expense that we are seeing there, we have our salaries and wages here. is 93,000. And we are not going to put it as 93,000. We go to a different function to see what in adjustments that is affecting our salaries and wages, and then we can adjust. If there's no adjustment, we can take it as it is. So if you go to additional information, you'd see that we are told that on item number 3.1, included in salaries and wages are salaries for members, Malebo 20,000 and Renato 13,000. So we need to remove these amounts in salaries and wages and charge them as Malemo 20,000 and Renato 13,000. So if you add the two, 20,000 plus 13,000, we're going to get 33,000. So we're going to subtract 30,000 and figure for salaries that we need there. For salaries and wages, subtract 13,000. So remember, the figure that we are using is 93,000. And we subtract 33,000. So can go to additional to our answer section and just adjust it as it is. So we are saying salaries and wages. In brackets, we're saying 90,000 minus 33,000. And then if you calculate it as it is, we are going to get your 60,000. And then obviously these are being allocated to Malebo 20,000 and then Renato we have 13,000. So we can just indicate it as such. So you're saying salary Malebo. Malebo is 20,000. We're saying 20,000. And we put also salary. Renato put 13,000. So this is what we have according to the instruction that we are given there. Then we go again to the additional information, try to see what we have under salaries, and we've got insurance, which is 4,000. And for insurance, again, we go and check if we've got any additional information that is affecting our insurance. You go to item 3.5, included insurance is annual premium of 1,500 for policy that was taken out on 1 September 2015. So this policy was taken for 1 September. We need to know how many months it has it applied to the current period. Remember, our current period is ending on 28 February 2016. So starting from 1 September, we put September, October, November, December, January, February. So we got 1, 2, 3, 4, 5, 6. So 6 months apply. So remember, this is ending on the insurance is ending on let's try to see 1 September. It was taken 1 September 2015, so it's ending on end of August, which is maybe 30 August 2016. So only 6 months of this year apply. So you're saying half of the insurance should be removed. So you're saying 1,500 divided by 2, and you're going to get to 750. So we're going to remove 750 and we are left with 750. So here we are saying all the figure for insurance that we have, which is 4,000, we are supposed to subtract 750. So we're saying insurance, and we are saying 4,000. We subtract our 750, and the answer that we are supposed to get there, 2,250. So this is what we have. And then we can, after insurance, we go and check again what we have. We've got stationery. Stationery is 2,900. This is stationery that was paid for. But if you go to additional information to see if you got anything about stationery, we have it here on item 3.2. If stationery in brackets used 2,000. What does it mean? It means that the stationery that was used is 2,000. And obviously, what is remaining is 900. Was what was bought in the trial balance is 2,900. So if 2,000 was used, 2,000 was used, it means 900 is remaining at the end. So this is our the stock of stationery that we have at the end. So in our statement of profit and loss, we're going to put 2,000 as an expense because that was what was used is the expense. So here we say stationery. So we are saying stationery, and we are saying 2,000. Then we can go again to check on the next item that we have in the trial balance. So if you come here, after stationery, we've got repairs. It's 8,900. We go to additional information to check if we got anything to do with the repairs. We're going to see that we've got nothing to do with the repairs there. So we're going to check 8,900 as it is and put it in the statement of profit and loss. So here we are saying repairs. And the figure that we have is 8,900. So this is what we have. So we can move on to check on the next. So if we come on the trial balance, we have finished on repairs. So after repairs, we've got interest loan to member, which we adjusted under plus income. Then we've got interest on loan from member, 1,000. So this was the interest on loan from member that was paid, but we need to go to additional information to see what we have in terms of interest on loan from member. So remember, the interest on loan from member is going to be an expense, and we are told that is 15%. Provided is 15%. So we check the total amount of interest on loan from member in the trial balance from my label, which is 10,000. So we're going to say 0.15 times 10,000. And obviously we are going to get you 1,500. So this is our loan, interest on loan from member, which is an expense. But if you come here, you'll see that the one that was paid was only 1,000. So it means we paid less. So I will paid less by 1,500 minus 1,000, which is 500. So you need to add 500 to 1,000 so that it gets to 1,500. So that's what we're going to adjust there. We go to our our statement of profit and loss and say interest on loan from member and provide for the one that was outstanding. So we said 1,000, then we add 500, which is one outstanding. So to get our 1,500. So this is what we have, and then we can go to the next one. From interest on loan from member, we've got water and electricity, which is 4,600. Obviously, we need to go to our entire information to see if we've got anything that is affecting our water and electricity. But if you go through, you see that we've got nothing. So we're going to put it as it is. Here, we're saying water and electricity. And we are saying the figure that we are using there is 4,600. Then we can again go and cross check what do we have next after water and electricity. We have got remuneration of accounting officer, 2,500. So we go there and check on additional information if you've got anything affecting remuneration of accounting officer. But if you go through, you're going to see that there's nothing. So we're going to put it as it is. So we're saying remuneration of accounting officer, and the amount that we have is 3,500. Then lastly, we have got an expense that won't be listed in the trial balance, but you can only get it on in additional information, which is depreciation. Depreciation can never be listed in the trial balance, but you can go to additional information you identify it. Here we have it on 3.6. Provide for depletion as follows. Um, Vehicle 20% per annum on straight line method, and then equipment 10% per annum on diminishing balance method. So let's start with vehicle 20% per annum on straight line method. So we go to the costs of vehicle. Remember, straight line method, straight line. The formula that we use for straight line is percentage times cost. If you're given it is 12%, we can just maybe try to verify the percentage, 12% for vehicle. So in this case, we are saying the cost for vehicle that we have is 30,000. Yeah. So we are saying 20%, which is 12 over 100 times 30,000. Obviously, if you reduce it further, it becomes 0.2 times or 30,000. And try to calculate that one. We're going to get you 6,000. So 6,000 is the depreciation for vehicles. And then the other one, is using diminishing balance method. It is 10%. Diminishing balance method, it is 10%. So we are saying diminishing balance method. Formula is percentage times carrying value, where carrying value is equals to cost minus accumulated depreciation. So first of all, we calculate our carrying value. So we go to and check the values of the cost of our equipment and the accumulated depreciation. Equipment is 14,300 cost and 5,300 accumulated depreciation. So we are saying 14,300 cost minus accumulated depreciation is 5,300. So let's calculate it and see what we get. So we are saying 14,300, and then we subtract 5,300, and then we are going to get you 9,000. So we have 9,000 is our carrying value. So that's the figure that we're going to use to calculate with the percentage of 10% now. We're now saying 10 over 100 is 10% times 9,000. Which you can simplify by further by reducing it to a decimal. It becomes 0.10 times 9,000. And then you are going to get your 900. So this is depreciation for equipment. So to get total depreciation, you're going to add the depreciation for vehicles, which is 6,000, and then you add it to 900. So we are saying total depreciation is equals to 6,000 plus 900. And obviously, we are going to get to 6,900. So this is the depreciation that we're going to put in the statement of profit and loss. So we come here. We are saying depreciation 6,000 plus 900. Thereby you get 6,900. So this is what we have. So we have exhausted everything in terms of our expenses. Now we can add there all the expenses that we have, starting from 6,900 plus 2,500 plus 4,600 plus 1,500 plus 8,900 plus 2,000 plus 2,250 plus 13,000 plus 12,000 plus 60,000. And then the total that you're supposed to get for the total for expenses is 124,650. And we are saying less, so we are subtracting. So if you say 307,100 minus 124,650, you are supposed to get your net profit here, which is supposed to be net profit, net income, so it is supposed to be 182,450. It's a positive, so it's our net income. So here, description, we're saying net income before tax And we have to go and check the issue of tax. How is it going to be charged according to this question? The pickup of the issue of tax, you can always find it in the additional information. So if you come here, you see that income tax is calculated is 20%. Very important. So if you come there, we are now saying the figure that we got before tax times 28%. So for our tax, we are saying income tax 28%, which is 0.28 as a decimal, and then we multiply by 182,150. And then if you calculate it correctly, you're going to get your 51,086. And then obviously, you're going to subtract it. Right, if you subtract it, then you get your net profit after tax. Net profit after tax, or the profit for the period 182,450 minus 51,086. You're going to get 131,364. So this is our final figure according to this statement of profit or loss and comprehensive income. So this is what we have, guys, according to this video. Let's meet again in the next video. As for this video, I'm signing out.